consolidated statements of financial position as at 31st December 2007. 31st December 2007. No current assets. You have PPE. $120 plus 177. Investments. NFFK. $134. Goodwill. Now the goodwill, I will leave 2 lines space. Current assets. We have inventory. N plus 5. Receivables. Bank. N plus 5. Total assets. Equities and liabilities. Share capital. Any does not have share premium. Share earnings. NCI. Foreign liability. 60 plus 17. Balance this account in exam. What is the account payable? We need the group structure, no doubt. How do they start? The group structure, adjusted retained earning. Of subsidiary. As per SOFP. I need to determine the net assets. I need to determine the net assets. Determination of net assets of subsidiary. Which is FFO, FFK. FFO is the parent. I need to calculate the goodwill, items, date of acquisition, date we are consolidating, and the post. I need to calculate the goodwill. For me to calculate the goodwill, I need the cost of investment, add NCI, purchase consideration, then the net assets, the date of acquisition. Goodwill. What do I need next? The retained earning of the parent, which is the consolidated retained earning, or say as per SFP. Then I need NCI. Date of acquisition. That's all. This is the first thing I will do in exam. After this one is done, I can now start reading the question and the posting. Within short period of time, I'm done. That is the purpose. We always advise that you open everything. With this, you are going to give me some math. Even though it's not much, I will still get something. I will now start reading it in the post. I'll go to the question now. Let me return to 100%. Go to the question. I'll say workings now. Good. Question 6, FFO. The statement of financial position of FFO and its subsidiary entity, FFK, as of 31st December 2007, we are swallowed. All figures assumed to be correct. On 1st January 2003, what happened? On 1st January 2003, when the retained earning of FFO show a balance of 60,000, FFO purchased 60,000 Naira share in MFK for 134. About 3 information, the date of acquisition was given, which is 1st January 20S5. The requirement or the financial statements, date we are consolidating, 31st December 20S7. How many years account? This is 3 years account. This is 3 years account. Based on the question. He now said when the retained balance is 60,000. Don't forget, net assets. Retained is part of the net assets according to IFRS 3. What are the net assets? Share capital, share premium, retained earning, other component of equity, revaluation surplus. Revaluation surplus could be in the book or happen at the date of acquisition. Or both of them exist, which we are still going to do. Okay, I'll go to the net asset of subsidiary. What is the shares? That's the first one. According to the question, the share is 75. 75. Now said the retained earning as at date of acquisition is 60. The training in the SFP at the date we are consolidating. When we acquired 3 years ago, it has 75. This is 120. That is it. He purchased 60,000 shares. I need to determine the group structure. Don't forget the group structure can be determined only 2 ways. What are the 2 ways? Through the numbers of shares acquired or given directly from the question. Is that they say 80%, 90? That is one. 2, or they say he acquired so number of shares, which I can use to determine the group structure. So I will now say, what is the total numbers of shares in subsidiary? Because the values of shares on the nominal value. The book value, when you open it, is what we are revaluing as FS. The book value, which is said it is 75. 75. They did not give me the numbers of shares, the nominal value of the shares in units. I will assume it is 1 naira. Any day it is not given. Assuming it is 1 naira. Because majorly, most shares are floated at 1 naira, 50 kobo. The major one, 1 naira. I will assume it's 1 naira. Naira cancel naira to give me 75. He only acquire, 60 to get the group structure now. 60 over the shares he acquired, 75. Total shares in the company times 100. Please, who can help us with this? What does he give us? What does he now give
80,
us? Huh?
80%.
80%?
Yes, sir.
So I can fill in the gap. I've known the group structure by saying parents, 80%, NCR, 20%. This is what he said in additional information 1. That will be of interest to me. And for the cost of investment, he said paying 134. I will ask the question, has it been recorded? We are still going to have complicated questions, complex questions. You will understand, has it been recorded? Maybe next week, when we are going to conclude the simple group, I will increase the volume to test all costs of investment. Don't forget, I told you that cost of investment that can be tested in group accounts and cash, which we are still dealing with. Out of the cash, we have not done per shares, but in bulk. Now, then we said share consideration, deferred consideration, contingent, and loan notes. All this can be tested. Last 2 diets, for 3 nights. That the one question. Go to your bank. They tested contingent, they tested deferred, I think shares, about 3 cash, about 3 costs of investments. But we want to start it gradually to increase the pace so that you can absorb the information. He said he paid 134 and it has been recorded. If it has been recorded, what is my own duty? I will credit investment minus, because I want to calculate goodwill. I'll go to the goodwill calculation. Cost of investment 134. That is the end of information 1. Then 2, FFO sold goods to FFK during the year for 10,000 unrealized profit on inventory. Unrealized profit on inventory. He sold goods. Don't forget, parent is the seller and is selling goods to the subsidiary. Okay. You are talking about unrealized profits on inventory. Unrealized profit on inventory. Don't forget, we said 2 things must be established. There must be unsold at DOC, and there must be element of profit. We said, how do I know there's element of profit? We have margin, markup, and the last one, the formula. Margin is on sales, while markup is on cost. Then the formula, which I will apply profit over total sales times unsold. And we have done this before. Then let's go to the question. After I've gotten the figure, what do I do for the unrealized profit? I will debit retain earning. It's so good for 10,000. Total 6. 10,000. Don't forget 30 account is possible. Let's leave at 10 for the account is at a markup of 25%. We've given markup 25. Then half of these goods is here sold. Sold now. 1/2 times 10, which is 5. Unrealized profit on inventory will now equals to inventory (25 over 125 times 5). You're sold. What does it give us? I think this is 1. Well, that goes to 125 is 5. Who is the seller? Parent. I'll debit account of the parent. The seller's account. Debit minus 1. Consolidated inventory. Credit minus 1. This is it. I'll go to the question. Unrealized profit on inventory. Consolidated inventory. Minus one. I'll go to return of the parents because he's the seller. Unrealized profits on inventory. That's all. Any question for me before I proceed? Any question? Any question? What was the return earning of the parents? $144. $44. I'll go to the next question. On 1st January 2005, the fair value of the net asset of FFK had a fair value of 155. Oh, say the fair value of the net assets. Say the net assets must show a fair value of 155. Say after I sum the net assets, it must give me 155. The fair value of the net assets as at the date of acquisition must equal to 155. I will ask the question. 75 plus 60. This is not 155. 75 plus 60 will give us 135. It does not equal to the net asset. I will ask the question, why are you lying? Why are you lying? Because the net asset is 155. I will now ask the question, what is responsible for the differences? The excess of the fair value over the carrying value in the individual financial statement of FFK was due to plants included in the property plant and equipment. This plant had a useful economic life of 5 years from 1st January 2005. Oh, there is a revaluation surplus of plant, which makes the carry amount different from the fair value. Can I get it? Yes. So the valuation surplus on plants. Balance figure 20. Second leg, don't forget, I will credit reserve and debit the PPE. We'll go to the PPE, second leg. Yes. That's all. And he has given, I need to charge depreciation. Useful economic life of the assets. I need to charge depreciation. He has given me useful life of the assets. Depreciation. 20. Five years. Divided by 5. Times from the date of acquisition to date of consolidation, from DOA to DOC, which is 3 years. This will give me 12. I'll say PPE credit minus 12. Adjusted return of subsidiaries debits minus 12. That's all. I'll go to the PPE. minus 12. We'll go to the depreciation. That's all. Any question for me? Any question for me? Immediately you hear the fair value of the net assets. That means the totality of the net assets must be cost ratio figure. I will now investigate, does it tally to the net assets? Yes, check out our retaining. I will add. That is it. Nice. There was no impairment. It is the group policy to value non-controlling acquisition proportionally to the fair value of the subsidiary net assets. Some people will say, fees themselves. Net asset is at fair value because of fair value adjustment, which can either be surplus or deficit. They shall proportion it or look at the net assets. What is the group structure? Parent is 20, NCI. Parent is 80, NCI is 20%. I'll go to the group B calculation. NCI 0.2 times 155. 0.2 times 155, what does it give us?
31.
31. This will give me 5. 165. I will less 155. Goodwill. They say there was no impairments. Next. I'm done with the question. Share profit. 120 minus 12. 120
108.
minus 12.
108.
108. 108 minus 60. That will give me 48. 48 is share between the parent and NCA. What is the post? 48. That is it. 0.2 times 48.
Nine point six. $40.6.
0.84 times 48.
$38.4.
That is the end. And now
181.
consolidate.
81.4.
150 what?
181.
151.
181. 181.
181.4. I'll go and consolidate. NCR 40.6. 181.4. What is the share capital of the parent? 100. This will give me 77. Then this is 14. 15. 55. What is the goodwill 10? PPE. Give us the figure for the PPE.
305.
305.
Yes, sir.
What is the total asset?
399.
399. Equity and liability.
The same thing.
That is the end. Any question? Any question? Let's go to the next question. Next question.
Sir, sorry, sir.
Yes.
Yeah, sorry, I joined late. I just want to know this revaluation surplus of 20,000. How did you get it?
They've given me the fair value of the net asset.
Okay.
It'll be 155. Then the date of auction is 60. Share is 75. 135. And he said plant is responsible for the difference. So there is a revaluation surplus of 20, according to the question. That 20 is a balancing figure, which has given me the fair value of the net asset in the question to be 155. That means if you sum all the net asset, as a date of acquisition, you have 155. But on adding them, I got 135, which is the share plus the retained. I will now ask the question, what responsible for the differences? And say there's a revaluation surplus of plants of 20. Any other question? Any question? Let's move to the next question. Can we increase the pace of this question? Let me see. Akoyi Grace Limited. Let me first of all touch like that. Send one question to you on your platform. Let me save this and send to you. FFO. Have you seen the question? Akoyi Grace. I've sent it to your platform. Yeah. Let me quickly solve that for you. Before we now go to the larger question. Akoyi Grace Limited and Zen Nation. Akoyi Grace acquired 3 million equity shares of Zen Nation on 1st of April 2003 for 40 million. Okay. The following are the following statement of financial position of the two companies as at 31st December 2003. The Akoyi Grace question is on your platform. Aquigris. We say consolidated statement of financial position as at 31st December 2003. No current assets, PPE. PPE of Aquigris, 60,000 plus 45. Next, investment in Zen Nation, 40,000. Other investments, $4,000 plus 8,000. Then goodwill. After the goodwill, I utilize space. An example. I go to the current assets. Inventory. 10,000 plus 20,000. Trade receivable. Trade receivable. 29 plus 26. Bank. 2,000 plus 1,000. Total assets. Go to equity and liability. Share capital. Share premium. Retail earning. NCI. Non-current liability. The parents and the subsidiary. Zen Nation. Non-current liability. 14 plus 9,000. Current liability. Change and order. Wait. 20,000 plus 17,000. Current income tax. 9,000 plus 5,000. That's all. To balance this accounting, what do I need? I need group structure. After the group structure, I need adjusted retained earning. Of subsidiaries. As per SOFP, what was in the retaining of subsidiaries? Give me the figure. As per SOFP, what was in the retaining? I hope everybody asks the question.
24,000.
Huh?
24,000.
24,000? $24,000. Do you agree with him, my fellow professional colleague? What is your stake on his own decision? Determination of net assets of subsidiary. She has told us it's 24,000 items. DOA, DOC, POS. Any issue with that? Do you have issue with that? Goodwill. Cost of investment. Add NCM. Purchase consideration. Net assets. The date of acquisition. Goodwill. Any return of the parents. Return earning of parents. As per SOF. NCI. Date of acquisition. Back to the matter. What was the retained earning as at SOFP? Back to the matter. My wonderful sister has given me 24,000. Any contrary opinion? Should we go with it? Yeah. Akoi Grace and Zenish. Who is talking? Somebody, yeah. Let's discuss. Is that the final answer? What was the return at SOFP of the subsidiary? What was the return? I can use to test this thing a lot. That's why I was racking my brain. What are those little things that can cause problem? Just as fair value of the net assets, return of this kind of nature, doing the acquisition. It's okay. What can be the problem? To me, It's not a trap. I want to ask you, class, let's assume in my account balance, before they pay me salary for February, I have 100,000 naira in my account. Before the salary is paid, I have 100,000 naira. Let's assume they now paid me 300,000 naira. How much is going to be my total amount in my account? Don't forget, before they pay me salary, I have 100,000 in the account. They now pay me 300,000. How much is going to be the total money in that account?
So it's going to be 69,000.
Hmm? You must talk. No.
It's not 400,000.
400,000. If you can know that, why are you selling? Why you do not know this one? Because I can use to test it. And I don't see trap with it. The question says, as at the beginning of the year, this is what we have. For this year ended, this is what is in accounts. This is what we make. The question will give you. Okay. As at the beginning of the year, 1st January, as at 1st January 2003, this is how much in an account. For this year, they will still put it for the year ended, 31st December 2000, for this year that ended. And students will be finding this one difficult. I used to ask myself, where is the trap? How is it a trap? He said, as at the beginning of the year, you have 36,000. As at the beginning of the year, 36,000 are in your account. But for the year ended, this year that ended, you make 24,000. How much is going to be in your total account?
69.
Huh?
60,000.
69.
I say 69.
60,000 naira.
50,000. I cannot test how many times. I can test this. I used to ask myself, does it mean students are not seeing it? He said, for this year, the end, I make 24,000. Whereas at the beginning of the year, I have 36,000. What is the total money will be in the accounts? Please, don't format it. Anytime you see this, it's a walkover. It's not a trap at all. That you'll be cracking your brain into this. Also, 36,000 plus 24,000. 50,000. This is what is in your account. That's all. If you go to PEP, you are still going to PEP. Complex question with this kind of arrangement.
Sorry, I thought 36,000 plus 24,000 is 60,000.
What do you say?
60,000.
36,000 plus 24,000 is 60,000, not 50,000.
Is this 60,000?
Yes,
Yes.
60.
60,000. 60, not 50. That's all. Let's see the question from the beginning. The question says, Akwege PLC acquired 3 million equity shares of Zen Nation. He acquired 3 million. Out of how many? I will ask myself to determine the group structure. Let's go to the working. It's okay. The account is in thousands. Okay. Total numbers of shares in subsidiary. Values of shares all over nominal value. What is the values of shares? The book value, 1,000. at a nominal value of how much? 20 kobo. 1,000 divided by 20 kobo, what does it mean?
5,000.
5,000? I have 5,000. Which I acquired 3,000. This is the total shares. 3,000 times 100. 3,000 by 5,000. How many percent does he acquire?
60%.
He only acquires 60%.
60%.
I'll go to the question. Parents. Parents acquire shares. 60%. NCL 40%. Good. That is it. That is it. Next, I'll go to the question. On 1st April, date of acquisition. I say, date of acquisition. DOA. 1st April 2003. When are we consolidate? 31st December 2003. Oh, this is not up to a year. This is not up to a year. How many months? From 1st April to 31st December. How many months?
9 months.
9 months. 9 months. So I have to consolidate 9 months. Oh, during the year acquisition. Anytime there is a during the year acquisition, nobody will give you retailing. Let's go there now, my brothers and sisters. Very simple. Nobody, no question. Anytime it is during the year, no retailing at the date of acquisition of subsidiaries in 2 ways. 1, during the year acquisition. What is during the year acquisition? Acquisition that is less than 12 months and at incorporation. On these 2 occasions, no retailing at date of acquisition. But as incorporation is very easy. Kajenyong, retaining as a date of incorporation is 0. He has not started work. He has not done anything. But during the year acquisition, I must calculate the retained earning. What is during the year when it is less than, when the acquisition is less than 12 months? I will now calculate the retained earning using this formula. This formula, we have 2 options. I can decide to use this formula by saying retained earning at the date of acquisition plus year ended profit or loss equals to retained earning at SOFP. That's all. The retained earning at the date of acquisition, which I don't know. The retained earning at acquisition, I don't know. They will not give me because it is during the year. I will assume, let it be K. Kasim is my name. I will use my name. Plus, what is the year-ended profit or loss? Go to the retained earning. He has given me profit for the year ended. He has given me for the year ended. What is for the year ended? 24,000 for the year ended. 24,000. Will give me return as at SLP. But don't forget, you only acquire for 9 months times 9/12. Now give me return as at SLP, which is 60,000. This is the formula we apply. I will remove the post 24,000 times 9/12. And that's okay. K plus 24,000 times 9/12. What does it give us? 24,000 times 9/12.
18,000.
18,000. 18,000 equals to 60,000. When I say K equals to 60,000 minus 18,000. What is our K now? 60 minus 18,000.
42,000.
That is my return at the date of acquisition. Alternatively, the one I can pack, the one I can give to you to use in the amateur, when it is during the year, when it is during the year, I will say, okay, return or retain any assets. Retain asset SOFP 60,000. I will less profit for the year. Less profits for the year, which is 24,000. This is the retain any balance brought forward as at the beginning of the year, 36,000. I will now say add pre-acquisition profits. Post is 9, pre is 3. 3/12 times 24,000. 3/12 times 24,000. 3/12 times 24,000.
6,000.
6,000. Will still give me the same thing. 42,000. During the year acquisition, no retain. Can subsidiary make loss? Yes. We are still dealing with profits. Before the end of your class, you will see loss. ICANN has not tested loss before. They only tested profits 2 decades ago during the year. They've tested profits. They've not tested loss. Can subsidiary make loss? Yes. See, you know everything. It's a matter of time. Before you go to the exam, when they give you the question, you cannot see question again. You must be seeing answer. With this, I'll be time retain. I will go to the net asset. Let me go to the net asset of subsidiaries. To go on. Oh, what is the shares? So I'll check. Share of subsidiaries. Share capital is 1,000. Does it have share premium? Yes, 8,000. You will have big share premium. Retain N, 42,000. Asset SOP is 60,000. That is all. The only relevant note It is the policy of the group to mention non-controlling interest on acquisition using the full goodwill method. For this purpose, the fair value of said nation, the fair value of a said nation, the fair value of the whole subsidiary. It does not say fair value of NCR. It said the fair value of said nation. If I want to buy the 100% of the subsidiary on the 1st April, I'll pay 62,000. 62 million. Don't forget, it does not buy 100%. You only bought 60%. I'll just come here. 62 million times 0.4. That's all. Fair value of the whole subsidiary. The fair value of the whole company. Don't forget, NCI can be valued in how many ways? 2 ways. Let me open another chapter. NCI valuation. We all said that NCI can be valued valuation. Valuation of NCI. Valuation of NCI. He said that it is fair value or share of proportionate. If it is fair value, what are the indicators? Market price per share of subsidiary or NCI. 2, fair value of NCI. 3, fair value of the whole company, your subsidiary company, which you will mention the name of the company. The last, 4th one, goodwill attributed to NCI. Share proportionally does not have issue. It is when the question is silent. And 2, company policy. The 2 and 3, students used to mix it together. They don't understand the 2 and 3. They used to mix it in. I don't know the reason. Because it is very clear. In this first one, it will say fair value of NCI. The second, it will not mention the name of the subsidiary. The third one, we say the fair value of the whole company. It will mention the subsidiary name. Their measure. 62. You do not buy at 100%. I will multiply NCI percentage on the 100%. Let's go to the question. We still have 2 more questions to solve. Don't let us waste much time on this. Okay. So what is 0.4 times 62? What does it give us?
20,800.
4,800?
6,200.
6,200. I hear 4,000, I hear 6,200.
24,800.
24,800. Cost of investment recorded. I'll go to the financial statement. Cost of investment. Investment is their nation, 40,000. It has been recorded. $40,000. 40,000 plus 24,800.
64,800.
Purchase consideration. I'll sum the net assets. $9,000 plus 42,000.
51,000.
51,000. Less the net assets. The goodwill. Minus 6 for 800. 13,800. I will go to the question. 13,800. Goodwill. Then I can now consolidate 60,000. I'll bring it down. $60,000 minus 42. 60,000 minus 42. 18,000. Share profit. I'll go to the question. Share profits. $0.6 times 18,000.
10,800.
What do you call?
10,800.
10,800. Share profits. $0.4 times 18,000.
72.
70. NCR at the date of acquisition, which I have got in the second level for the goodwill, 24,800. 24,800 plus 70. 24 plus 70. 32,000. As per SOP, what was in return give to me? As per SOP, return of the parents.
$77,000.
What do you call it?
I don't know if I'm correct. 77,000.
With what we have said, you are supposed to recover yes. There is no two ways about it. You had at the beginning plus the profit for the year. 77. No two ways. $77,000 plus 10,800. $87,800. That is the end of the question. I can now consolidate 87,800. NCI is 32,000. It is 7,800. What is the share capital of the parent? Go and break. Not correct. 1 plus 23,000. Not current liability. Please, what is the share capital and the share premium of the parent? Check the question. This will give me 37,000. This will give me
Share
15. No.
5,000.
Share capital of the parent is 5,000.
Yes, share
Share
premium.
Mhm.
9,000.
9,000. That is it.
19. 19.
Then 0. This will give us 12,000. This will give me 105. 60 plus 40. 25,000 on top. This will give me 30,000. 29,000 plus 26. 29,000 plus 26. 55,000. 3,000. Total. Oh, yeah. Let's add it. 105,000 plus 12,000 plus 13,800 plus 30,000 plus 55,000 plus 3,000. 218. Asset is giving me 218,000. 218,800. 218,800. Then 5,000 plus 90,000 plus 87,800 plus 32,000 plus 23,000 plus 37,000 plus 15,000. 218,800. Both of them. 218,800. That's it. Any question? Any question? Let me send it to your platform. Akoi Grace. Akoi Grace. Next. This. Let's go to another question. Which question is of your interest? Which question is of your interest that you feel like we should solve? Let me open the floor. Mention any question you want us to solve. Yeah. Is there any question anybody asks in the class that's of your interest? Abiodun?
Yeah.
Any question of your interest?
Increase the volume now. You said you are going to be increasing it bit by bit.
Increase the volume. Let me see which question can increase the volume a little. Let me see. We have to close 10:30.
Supposed to be 11.
11. Okay, that's good. Okay, if it is 11, let's see how far we can go on question 4. Aya Nigeria Limited. They asked us to prepare consolidated statement of profit or loss and consolidated statement of financial position. Aya. I'll go to the question. Yeah. So we are closing at 11. That's good. Consolidated statements of profits or loss and other comprehensive income for the year ended. For the year ended, which year ended? I hope you have seen the question. Started September 2017. Ineza, the way it is, page 1 of my book, revenue, cost of sales, gross profits, distribution costs, admin expenses, finance costs, profit before tax, our profit for the year. That's all. I'll go to the statement of financial position. Already consolidated. Statements of financial position as at 30th September 2017. Non-current assets. This will help me with figure to make the job faster. Non-current assets. PP 1299 200 plus 403 200. Put the goodwill. Current assets. 512,000 plus 211 200. Total assets. Equities and liabilities. Share capital. Retained earnings. NCI. No current liability. 10% loan rate. $96,000. Current liability. 262 400 plus 150 400. This is it. To balance these accounts, what do I need? To balance these accounts in exam, I will need to do structure. I'll need the group structure. Adjusted to ends of subsidiary as per SOFP. I need to determine the net assets. Determination of net assets of subsidiaries. Goodwill. Goodwill. Cost of investment. Add NCI. Purchase consideration. Net assets at the date of acquisition. Then I have my goodwill. I don't know there will be impairments. That has gone. What's my love? I need to retain any of the parents. Or put retain any of parents. As per SOFP. NCI. Date of acquisition. I need cost of sales. That is the major calculation we do in POL. Cost of sales. That's all. That is all about it. I'll now go to the question. I read that post. Let me share another. My workings. I'll now start reading. I'll say workings. Go to the question now. On 1st of April 2017, what happened? Date of acquisition. 1st April 2017. Acquire 60%. Which are we consolidating? Date of consolidation. 30th September 2017. Oh, this is not a year. April to September. April, May, July, August, September. April, May, June, July, August, September. 6 months. They want me to consolidate for 6 months. Oh, in my head, no retain. It is during the acquisition. No retain. 6 months. Okay. Acquire 60% of equity share capital of Lower Limited. Oh, go to the group structure. We'll go to the group structure. Parents. 60%. NCI. That is it. How does he pay for the 60% shares he acquired? He said through share exchange. Okay. A share exchange of 2 shares in parent for every 3 shares in lower. Share consideration. Can be tested in 2 ways. In example, 1, they will give me the exchange ratio, which is parent over subsidiary. Parent must be up. 2, issue direct. No exchange ratio. They will issue it direct. What do I need to know? Things to know. 1, it must be issued at market price per shares of the parents. That's the first thing. 2, if the market price per shares of parents cannot be determined in the question, then market price per share of parents must be subsidiary must be used. Market price per share of subsidiary should be used. That is it. Third one. In case there is no share premium in the statement of financial position of the parents, share premium account must be created. Third one. Fourth one, accounting entry, if it has not been recorded, accounting entry for share consideration provided it has not been recorded. Cost of investments, debits, equity shares, credits. To create a premium, credit, it is 2 credits against 1 debit. That's all. Those are the 4 things you need to know. These are the 2 ways it can be tested. STN issue. Let's go to the question now. You say you acquire 60%. I ask the question, what is the total number of shares in subsidiaries? Which is the value of shares all over nominal value? What is the values of shares? 128,000. 128. The nominal value of 128,000. He acquire shares. 0.6 times 128. 0.6 times 128,000.
$76,800.
76,800. You now use share consideration. Exchange ratio. Parents versus subsidiary. How many is the parent bringing?
2.
2 over
3.
2 over 3 times 76,800. 2 over 3 times 76,800.
51,200.
51,200. 51,200. It must be issued at the market price per shares of parents, unless the market price per share of the parent is not given. Go to the question. Did they give us the market price per share of the parents?
Yes, 6 naira.
I will now say cost of investment to be debited. 51,200 times 6. Equity shares, which is the share capital, to be credited. 51,200 times 1 naira to give me 51,200. Has it created a premium? Yes. Today market value is 6 naira. Share premium. That's all. This is the accounting entry. We are 51,200 times 6.
307,200.
307. What is the premium now?
256,000.
This must be debited. Credit. It is 2 credits against 1 debit. I will ask the question. Has it been recorded? Has it been recorded? Has it been recorded? Ask the question. Let me ask. How do I know it is recorded or not? In exam, 3 ways. 3 ways to know whether it is recorded. This is recorded or not recorded. It's a language of group accounts. It's a language of group accounts. Recorded, not recorded, recorded. How do I know it is recorded? 1, way to know if it is recorded. When the question is silent, it is recorded. What do you mean by the silence? After giving you the cost of investment and everything, he will not tell you anything again. You will move on. You will not move on. You do the needful. It is recorded. 2, clearly stated in the question that it is recorded. That is the second one. The third one, through investigation. These are the 3 ways you can know. These are the 3 ways you can know. Let's ask the question. The question. Yes. Ask the question. Has it been recorded? We ask to answer as time is going.
Yes.
You have asked and he said yes. He
It
said
was not stated.
the 2 shares in higher, for 3 shares in lower. The issue of the shares has not yet been recorded by Aya Limited. You to investigate, go to the non-current asset. Do you see investment in lower? How can you say yes, it is recorded? I said 3 things. We will investigate, you will know. In the non-current asset, they did not put anything. It has not recorded. What is my own duty when it is not recorded? Cost of investment debits. I'll go to I've opened it. Cost of investment debited. My goodwill calculation. 307,200. Equity shares credit. What is the share capital of the parent in the question? What is the share capital of the parent in the question?
320,000.
320. Plus credit. 200. Has it created a premium? Yes. The parent does not have share premium account. So 6,000. Yeah, that is it. Ask me a question. Ask me a question. Ask me a question. In the absence of no question, I go to the next thing. Good. Additional information 1. At the date of acquisition, fair value of lower limited assets were equal to the carry amount with the exception of item of plant, which had a fair value of 64 in excess of the carrying amount, 64. Evaluation surplus. PP 64. Don't forget that 1,000 is in 1,000. Plus, you are talking about the net assets. I will credit the PPEs. Evaluation surplus. Was the item DOA, DOC, then post. Share capital 128,000. They will not give me retain any. It is during the year. I will not bother. Revaluation surplus on plants 64,000. That's all. Does it give me depreciation? Or you should have to calculate it? Five years at that date. 5 years. Useful life of the assets. Let's go to the working. Depreciation. $64,000 divided by 5 times DOA to DOC 6/12. Who can help me with the figure, please? 64. Who can help me with the figure?
64.
64. BP, credit, adjusted, you're welcome. I'll go to the system. BP, adjusted retail, depreciation, as per SFP, what was the retaining? 2.8. I will do as if I did not see the POL. That one is a simple thing. POL is a simple thing. Just to add, the major calculation in POL is cost of sales. Any question before I proceed? Second additional information. Sales of lower limited to higher limited in the post-acquisition, depreciation, must go to cost of sales before we forget. Oh, no. We have opened our cost of sales. Go to the question. Current cost of sales. Two zero 2016,000. 2016. Zero thousand. Sub cost of sales 1024,000 times 6/12 because we only acquire for 6 months. Depreciation. If it is surplus, addition to cost of sales. If it is deficit, less. 102 24,000 times 6/12.
512,000.
512.
Yes.
Good. Next information. Sales from lower limited to higher in the post-acquisition period. We are 256. In the post, 256. Total sales. Total sales. 256,000. Good. Markup 40%. Markup 40%. He has sold 164, 166.4. Sold, that means unsold. 256,000 minus 166. How much is the unsold now? Please help me with the figure. .
89,600.
89,600. Thank you, my sister. Unrealized profit on inventory. Which bonus will I give you to have a fun value? Let me say like 5 questions for you. Free of charge. Solution. Yes. Yeah. Unrealized profit on inventory. 40 Simaco times 89,600. I will debit the seller's account. Consolidated. Yeah.
25,600.
My sister. Shout me after the class for tomorrow. For your bonus.
Okay. Okay, sir.
25,600. Debit is credit consolidated. Who is the seller? I'll go and check. Lower. Subsidiary is the seller. I will remove from his account. But to the cost of sales, intergroup sales must be eliminated. Go ahead. Intragroup sales. You cannot sell to each other for the total revenue debit minus 250. How much is total intergroup sales? 256,000. 256. Then cost of sales. Credit. That's all. I'll go to the what I've opened up. No current assets. 25,600. Unrealized profits. I will debit return of the seller, which happens to be subsidiary. Unrealized profit. Go to the cost of sales and the revenue. Intergroup sales. Revenue of the parents. So, minus 256,000. That's it. I'll go to cost of sales. You cannot sell to each other. Two five six. That is it. Next additional information. You want me to tell you? Trade receivable. The other season includes 19.2 due from Ayaya, which is not agreed corresponding trade payable that was due to cash in transit of 6.4. Trade payable, trade receivable reconciliation. You cannot owe each other. Cash in transit. Cash in transit. Say he wants to collect trade receivable. Minus treasury. But there's a cash in transit of 6.4. Debit. They did not split, they just give me current asset. Trade payable. Minus. The difference between 9.2 minus 6.4, 12.8. That's all. Any issue? Any issue?
Sir, why are we putting in loan notes? I thought supposed to be under payable, current liability. The 12.8.
Sorry, oh. Now sleep the worry on me. Thank you. I hope others have not slept. I mean, they have slept too. Because it's only me and you. The other I say we should increase the 10%. We do not hear, of course. Minus 12.8. That's all. We no go agree for anybody, including ICANN. Third one, last one. Ayaya Limited has a policy of accounting for any non-controlling interest at fair value. For this purpose, fair value of the goodwill attributed to non-controlling interest in lower level is 48. Oh, he has given me goodwill attributed to NCR. I have two options. But he has not given me the net assets. We have not gotten the return at the date of acquisition. So I have not gotten my net assets to even determine my goodwill. Where can we use? With me, please. Let's go and share another one. Let's use red for this. It's okay. I need to determine my return at the date of acquisition. I will apply the formula. Determination of return and DOA. I'll say okay. Retain earning at DOA plus year ended profits or loss equals to retain earning at SOFP. What is year ended profit or loss? Given in the POL, okay, 96,000 POL times 6/12 equals to 208,000. retain earning at SOF. K plus 48,000 times equals to 208,000. K equals to 208,000 minus 48. 160,000. That is the retained at the date of acquisition. 160. I'll go to the question. My retained at the date of acquisition. Where is the net asset? $160,000. What is the total asset now? Somebody should help us out.
$352,000.
352,000. I will go to the question. No problem. So I started again. He has given me goodwill attributed to NCI. I have two options to determine total goodwill. Option one, I will calculate the goodwill of the parent. Calculation of goodwill of parents using share proportionate method. I'll say cost of investment 307,200. Remove parent portion of the net assets 0.6 times 352. The shorter method 0.2 times 0.6 times 352. What does it give us?
$195,000.
I'm not sure. Are you sure?
Yes, sir.
It's 211,200.
Thank you.
Madam, are you sleeping like me?
No. Sleeping.
Minus 307,200. So the goodwill of the parent is 96. This is the parent goodwill. Don't forget, they've given me NCI, parent goodwill. They've given me NCI, so the total goodwill. Parent zone. And that of the NCI. So 8 plus 6, 14. 9 plus 4, 13 plus 1. 144,000. This is option one. Option two, I will get NCI at fair value. NCI at fair value, which means goodwill attributed to NCI plus NCI percentage on net assets on the date of acquisition. They've given me 48 goodwill plus 0.4 SCI percentage times 352,000. 48,000 plus 0.4 times 352.
$140,800.
I hope it's correct this one. 140. 48 plus 140,800. Forty-eight plus 140,800.
188,800.
That is the NCI at the date of acquisition. 800. This is what I will not take as the value of NCI at date of acquisition. I will now go and add it to the cost of investment for goodwill calculation. It's okay. 188 will give me the purchase consideration. 307 200 plus 188 196,000. I will now less the net assets. It will still give me the goodwill. These are the two ways. It's the goodwill I will now report. $144,000. The next year, the date of acquisition. $188,800. I cannot share the post. That's the end of the question. I cannot consolidate. So 8,000 minus 64. Minus 64 minus 25,600. 176. This one will give me 128,000. 176,000. There is no value further. 176 minus 160.
16,000.
16,000. 16,000 will not be shared between the parent and NCI. Share profits. $0.4 times 16,000. 0.4 times
9
16.
6
Huh?
9,600.
0.4, 9,000.
No, for parents. Oh, I'm talking about parents.
Sure profits. $9,000 what?
600.
As per SOFP, what was in return?
1,132,800.
1,132,000. 132 what?
132,800.
Plus 96.
1,142,400.
1,142,400. That's it. What was the figure for this?
64.
0.64. 188. 800 plus 64.
195,200.
195,200. With this, we are slotting the figure. Everything will balance. We are slotting the figure. I bet you people don't go work tomorrow.
We dey go.
I will go and balance the remaining. Abiodun calls this one. I ain't saying lie down. After we lie down, come dey silent, no dey help us. There is God. Oh. Okay, please take note of what we have done this night. We have treated cash and share. We are still going to treat the shares. Next week, we are going to increase the complexity of the question. I have given you assignment now. Groovy, Sabinus, and Alata, please submit and get solution. But that my sister that has giving me answer figure. That my sister has been giving me answer figure. Solve one and get 5. 1 for 5.
I've solved one already. I haven't given me anything.
When do you solve?
I've solved Alata and I've sent to you today. You even prayed for me.
What do you want again? What do you want again? After the prayer, what do you want? Okay, let me give you the solution for the remaining 2.
No, let's try first.
Okay.
Yeah.
After I pray for you, there's nothing we will give you again. For the rest, solve 3, get 5. But term and condition apply, shall not just open everything and say you want to get it. So let me send you your solution. I'm going to wait. See you next week by God's grace.
Thank you, sir.
Welcome now.
Good night.
Good night.
Thank you.
Thank God.
Are you sending these solutions to us?
Yes, now. The one we did
Thank
to this is on the platform.
Yeah?
The one we did,
Yes, this one that we did, yes.
the one we have done today self is on the platform already.
Now your voice is not audible. Oh.
I said the one we have done is on the
Yeah.
platform already.
Okay.
This one is also going there now.
All right. Thank you, sir.
You're welcome.